what do you think about, there has been a lot of complacency, it seems like, in the oil market. Is this going to get shaken out?
We're definitely seeing that right now, Matt, and it just highlights once again what a very difficult time this is for oil traders around the world. On one hand, we got Trump tweets sending the market up and down, and now this week it's been sending it up due to the trade hopes. But then we got the Middle Eastern situation. We saw earlier this week that the geopolitical risk premium following the Aramco attack was completely wiped out. It's just too soon to do that, and we're seeing some of that being retraced now. And who really wants to be short ahead of a weekend? We know what happened a couple of weeks ago in Saudi Arabia.
Ole, good to have you on the programme. Let me ask you about how long geopolitical shocks last in the market for commodities right now, because our guest in the last hour was making the point that because shale is able to turn the taps on and off quite so easily, it means that perhaps the impact, the spikes and the quick sell-offs that we can see on geopolitics don't have the same long-lasting impact.
They most certainly haven't, and we saw that particularly after that Aramco attack, where the market returned to the previous levels within a couple of weeks. It is having an impact, and also because the market is really right now completely gripped by the worries about the slowing demand and growth heading into 2020, and that is really as soon as the market just stabilizes and realizes that we're not seeing any actual disruption or any long-term impact, then the market starts to drift lower again. So what could potentially be different this time is we have this potential news coming from Washington later today on the trade front. If we do get some kind of a deal, light or not, light or heavy, probably more light, then that could reduce some of that focus in the market we've seen recently. That could potentially add a little bit of extra support to oil prices.
How much of the slowdown in demand growth, Ole, is structural, is a long-term issue?
I think so far we're not seeing so much of that being the structural. We have obviously seen quite a bit of a slowdown in car sales, so that the gasoline demand looks quite weak. But overall, I think it is more the general risk to growth just here in the short term, at least that's driving this downturn. But structural, it is. The oil market is going to face challenges over the coming years. In the short term, potentially not by having made enough investments to make sure there's enough oil until we get to the peak in oil demand, but obviously that's still too early to say.
What do you make of the role of OPEC in all of this then, Ole? We heard from the Secretary General Barkindo. He said that they would do whatever it takes to prevent any kind of slump. Are they still in a position to do whatever it takes?
I think they're struggling. They obviously have been supported, or they have received the help from the complete collapse in Venezuela, the continued reduction from Iran, and then also what happened in Saudi Arabia last month. But overall, they have to continue to keep very tight production over the coming year. The question is obviously whether they can keep the compliance at a strong level, and whether they can keep Russia on board as well. What may come to a little bit of rescue if we see the growth in U.S. shale production slow a bit. We've seen that slow this year, but the EIA is still quite bullish in terms of what the near-term outlook looks for that. But I think today, apart from the tanker attack, we also should focus on the IEA report, the monthly report, which comes out around noon, just to get the highlights from the Paris Organization's latest views on growth and demand.